All right, looks like we are live. I'm ready to go. Whew, how crazy is PYPL? This is what we want to talk about today. It is a holding in our fund. I was expecting earnings not to be so great, but this is a bit worse than I expected. So we're going to do a little bit of a deep dive on PYPL. See if the research that we make today makes sense from what we're seeing in general. Because it's just absolutely crazy. CRK popped up in my scanner just now. We actually are looking to potentially buy this one a little bit lower in this area, 2173, but that is a clear topic for something else, because right now, like I said, PYPL is what I'm focused on. I was also worried about, this selling off here. I was already thinking, do we close out this position and re-enter? It is a long-term hold. It is something I was looking to hold for over a year. So I don't want to turn it into a day trader on PYPL, but let's see, is this still a candidate, for holding over a year after the news today? Let's just quickly start on the monthly chart, get an overview on this ticker. I mean, it is down from its highs, 83%, then it bounced up quite a bit, and now it's back down to that critical 83% zone, and actually now it's actually down way more at 43.50. So now we're 86% down from those highs. Huge. Next big support zone is actually exactly where we are right now. So looking like it might even just bounce from this area, but let's move in on the weekly chart. See what we got. Doesn't help too much. Let's go to the daily chart. All right, we got that parabolic move to the downside. Let's go to the 4-hour chart. You can see this is that support zone, and let's go to the 15-minute chart. It's moving around down there. I am tempted to keep sizing into this ticker based on what we're going to talk about today. Although we do have already our full size. I initially did not buy it full size. I don't have actually my indicators or my our broker connection here, but we bought it initially in this support zone and small size, and then we were sizing into this area. And now that earnings just absolutely crazy flash. So let's dive into the details on this one, because that is just crazy. And right before we dive into the details, what I do want to do is just keep an eye out for what's going on this month or this week specifically. So today's Tuesday. We got Jolts coming out today. I don't know if that's going to be too interesting. We'll keep an eye on it. Consensus and forecast are all pretty close together. The thing that we're going to be looking for is, well, okay, that's a different topic, but ideally we want to see the it come down lower. Let me just see here if there's anything else. Friday, unemployment rate. This is going to be a big one Friday. Maybe we'll stream for that. Yeah. And then Wednesday, inflation. Those are the two big ones. These I'm not so interested in. Let's go to the economic calendar. So you can see earnings, a lot of earnings coming up. It's getting busy again. Look at that. Let me refresh this. Today's the 3rd. Earnings 1,600. Tomorrow 1,700. So yeah, we're in the middle of earnings season right now. Want to keep a close eye on that. Jolts report coming out in 42 minutes, so we'll still be streaming for that one. Let's dive into this one a little bit more. In the United States, job openings refer to all positions that are open, not filled on the last business day of the month. Job openings are part of job openings in labor service, JOLTS service. That's where the JOLTS come in. The survey collects data from around 16.4 thousand on-farm establishments, including retailers and manufacturers, as well as the government. Boom. Let's actually go launch chart. I've actually never launched the chart on this one. Let's see what we can find. So we have the monthly. Let's open that up. Here's Jolts. Job openings closing. And let's actually put this one on our macro. There we go. Knew something was missing. Next thing, typically before I trade, I always look at the calendar, so I'm not missing anything. Today is the 3rd. That means right here. So again, this is a pretty chill week. Exactly what I like to look for when I'm day trading. A week that is not so busy, even though it is a bit earnings season. So that does make me a little bit nervous typically. And the reason for that is because I was trading a lot of small caps for many years, and when the large caps come out with earnings, it just takes a lot of the focus away. As you see right now, PayPal, huge down, 20% from its pre-market highs. Obviously, there's going to be eyes on PayPal and not so much on small caps, and that's why our gap scanner right now is absolutely dead. Let's really quickly go to the SPY. Just check out this one. This is a daily chart, and you can see that we actually ended up holding the support zone, following this 50 SMA, constantly finding support, and it looks like we might even break to new highs after so many interesting days, right? With Warsh, we're gonna come out with a video about Warsh and the Fed candidate and what's next on that. So what did happen with PayPal? And one sec, gotta zoom in here. Put that over here. All right. I just noticed, I was looking on the stream for a second, the slap the ask is right in my face. I've never noticed that before. Maybe I'll have to remove it. Let's start with FinViz here. What FinViz actually started doing that I like a lot more and more. At first I thought it was a little bit obnoxious and the AI was sometimes saying something that was summarized a bit weird, but I think they may have made an improvement. But here you can see PayPal shares fall as it posts Q4 earnings misses. Adjusted EPS $1.23 on 8.68 billion, and weaker outlook. I think it's the weaker outlook that had people worried, and we'll talk about that more in a second, but it's the change of CEO, weaker outlook. They were saying results came in lower than expected, so they themselves were a little bit surprised, and I think that's really the problem. Anyway, let's keep going. The company also decided its first ever quarterly dividend and named Enrique Lora CEO effective March 1st, 2026, with Jamie Miller as interim CEO and David W. Dorman as independent board chair. We'll dive into Enrique Lora's effective March 26th as well. But let's just take a bird's eye view, right? We got a $40 billion company at the moment. It was just at a $50 billion company. PE right now is 8.6. Forward PE is at 7. PE was over 10. It was 10.50 right before earnings came out. So this is relatively a cheap company if they can figure out how to turn things around. And that's the big if. And right now, the market is pricing in PayPal that they cannot turn things around. That's what has people so worried. So let's look at here. Earnings per share is going up. Sales are going up, although they're slowing down, hence the dividend play, right? It's turning into a value company instead of a growth company. But this is something that made me very bullish on PayPal. It's the fact that there's a share buyback program. So not just are they offering dividends now, there's a share buyback program, which means, in effect, and I think this is what the calculations came out to, but I will have to double check this again in a second, but they're roughly buying 10% of the shares outstanding per year right now. So by default, you get your dividend of 1.5 or so, plus you're getting 10% from the shares buyback program. So by default, if nothing else happened of this ticker, it should go back to above 50 by the end of the year if the management didn't do anything else productive. So I think worst case scenario is probably priced in on this ticker, but let's see what else we find. They're getting downgraded. I'm not worried about the downgrades. Downgrades are typically following trend. So when a ticker trends down, more negative news. When a ticker trends up, more positive news. It's not necessarily positive news or positive analysis comes out and then the stock starts coming up. That's very, very rare. That Michael Burry kind of reporting is not the norm, let's just say. Let's scroll down here. So I absolutely love the fact that, you know, sales are increasing, shares outstanding are decreasing, earnings are going up. So that's all pretty solid. Let's go down here. 5 minutes still open. If we go to the income statement really fast, which we are already on. If you go to shares outstanding, you can see it again. This is, I think this is quarterly. Yeah, quarterly shares are constantly going down. So less shares outstanding means the value of your shares are getting bigger slice of the pie. That's really nice to see. When we trade small caps, it's the exact opposite, right? You're trading tickers that are constantly diluting, and it's just an ugly, ugly place to be. 1 second here. I have bitrate warning. Let me see if I can fix that. Desktop audio mix. They are recommending 6,000. All right, let's see if that fixed the issue. Let me know if it looks any different on your end. This should be pretty interesting to see what it says. Okay, so let's get back to it. So if you go to investor.paypal.com, I wonder actually what happens if you go to paypal.pypl, probably redirects to paypal.com. Investor relations page. And then it redirects instantly. Okay, anywho. Here's the webcast. You could listen to the earnings that came out at 7 a.m. Earnings, IR newsletter, and the investor newsletter earnings presentation. We'll just go through each of them. So I already have them all open, but it's pretty straightforward. We could just click on each one and go through them one at a time. I think this executive summary says quite a lot. In 2025, PayPal declared solid performance across multiple areas of business. We grew revenue, transaction margin dollars, and earnings per share, underscoring the strength of our increasingly diverse platform. Diverse platform, obviously, because of Venmo. They have their buy now, pay later. Braintree was always there, but now it's picking up a little bit of steam. The problem with Braintree is their margins are a bit less, but let's keep going. At the same time, our execution has not been where it needs to be. So this is where they admit their execution has been lacking, particularly in branded checkout. The disappointing part with branded checkout is actually, it's a little bit like Stripe. It's where they make the majority of their money. It's like a core profit center, and that's having very bad growth. I think the growth was around 1%. As announced today, the board's appointment of Enrique Lors as PayPal's new president and CEO reflects a clear commitment to strengthening execution, innovation, and results. We are fully aligned on the path forward as PayPal enters its next chapter of growth. Scrolling through here, cash flow, dividend program, 14 cents per share. Yeah, it's not so great, but probably better to increase your dividends than start too high and need to decrease it. The company intends to pay a cash dividend on its common stock on a quarterly basis going forward, subject to and contingent upon market conditions and approval by the board in its sole discretion. That's typically how it goes. There's nothing new there. Q4, seeing if I see anything that sticks out. Revenues. I mean, everything is increasing. It's just increasing slower than expected, right? It's turning from a growth stock into a value stock, and there's a little bit of a vote of lost confidence in the markets right now, and that's why it's down 17%. Market's about to open. We can go ahead and watch this one just a little bit here. So right now, still selling off, breaking to a new low, but I would assume it's going to be back over 43.73 before end of day, especially after such a strong sell-off in the major support in this area, but we'll see. So we'll put it on a 5-minute chart for now and let it ride a little bit. Here you can see their gross margin back below 196 or back below 2. That has people worried. Let's keep going. Okay, yeah. Didn't see anything there that made me too worried during my deep dive earlier today. PayPal's growth is diversifying. Buy now, pay later. Pay with minimum, continue to take share. I'm not crazy about the fact that their buy now, pay later program is actually doing well. Buy now, pay later to me, I feel like is going to have some huge issues at some point when we hit a recession. Yeah, and improving their checkout flow. That Venmo's growth 7%. You guys used Omni before? To be honest, I am not so familiar with it. Omnichannel payments are integrated payment system that synchronizes customer data and payment information across all sales channels. So it's a little kind of, it seems a little bit like a point of sales slash inventory management, maybe sales team, so on and so forth. Salesforce as well. But it is, it's popping. It's really taking off. In Germany, a lot of people use PayPal. It's kind of insane. I don't actually fully understand it. But I asked around and they say, they just prefer the fact that they don't have to share their IBAN information, which is basically your account number. Although I find that to be pretty convenient. But yeah, privacy in Germany, privacy is very important. I really like the fact that these payment options, this is pretty basic payment option with Google and so on and so forth. But still, what I like is when OpenAI builds out their store more and more, that PayPal is an option there. I really want to see that as a PayPal holder. What's up, North Sail? Good to see you. So just saw that message come in now. Yeah, this is what people have people really worried, the slight decline in the margin. So it's becoming a slightly less profitable company. It makes sense. There's a lot of competitors out there. The total assets in terms of what customer balance is roughly flat. It just wasn't a really exciting quarter. But they're making more money. Cash flows are very, very healthy. So I'm not too worried. Let's see if I don't think I took any notes on this page. Nope. All right, that was it. And let's learn a little bit more about the new CEO. All right, this morning we announced that the board of directors has appointed Enrique Lors as the next president and CEO of PayPal. Oops, I don't know why that was wrong. Enrique Lors. Let's just type this in. Former CEO of Hewlett-Packard. We'll do a little bit of a dive into him afterwards. Enrique will help accelerate execution and bring greater discipline to how we implement our strategic priorities as we enter our next phase of growth. PayPal also releases fourth quarter that we already talked about. Key highlights: transaction margin dollars, $4 billion plus 3%. Small increase in the balances that we've already mentioned. We have nothing new here. Okay. Whoops. I got way too many alerts going off. One sec, let me turn that off. All right. Interim CEO Jamie Miller said in 2025, PayPal delivered solid performance across multiple areas. We grew. Yep, we already read that. Everything looks good, but they're a little bit disappointed with the overall execution. Branded checkout. We grew Venmo revenue roughly 20% to 1.7 billion, delivered more than 40 billion in buy now, pay later, and returned to our enterprise payment business. I got to mute that. That is coming up way too much right now. Enterprise business payment business to double-digit growth. That sounds good, but overall, assets are just not growing as expected. Here we go, the guidance. For the first quarter of 2026, we expect transaction margin dollars to slightly decline. That's a recurring theme. Transaction dollars, margin dollars, example, interest on customer balances, roughly flat. Non-GAAP EPS earnings per share growth, mid-single digit decline. So this is just negative in general. Forward-looking expectations. For the full year 2026, we expect transaction margin dollars a slight decline, still roughly flat. Decline earnings per share. That free cash flow though of 6 billion is looking really good, and 6 billion in share repurchase, which is now more than 10% of market cap. So that is a huge amount. It's like 12%. As we enter 2026, we have a solid plan in place to restore branded checkout momentum, and we are making targeted investments to strengthen our foundation, accelerating our growth and initiatives. We believe we have the right strategy in place to deliver durable, profitable growth over the long term. We are confident in our path. So this is why I'm pretty comfortable holding through a big sell-off like this. It's a ticker that eventually I think at this price point, you will get green again. It's just, the question is it a value trap? How long is it going to take? Because right now, most people are underwater, obviously. And you can see there, we had a bit of a recovery in the last 5 minutes, but now we're pulling back again. Let's see what Simply Wall Street says about PayPal. It has not updated yet. It still believes it's 52.33. So just keep that in mind. It already thinks it's undervalued 36%. Well, it's going to think it's undervalued like 50% in a second here. So this fair value range, I think, is kind of important to talk about. There's several calculations regarding fair value. Obviously, the most common are free cash flow or discounted free cash flow. Now, the classic analysis on a ticker like this with a financial model puts the company at around $70, 71, 72. There's different analysis based on which models use, which inputs use, but this is what the fair value roughly seems to be, which at this point would be like an 80% move off the current price. There are other models that are viewing it higher, so that's why something like Simply Wall Street is analyzing that PayPal is undervalued. Let's keep going. I really like the PE now is roughly at 8, so just absolutely crazy, the low PE on a company like PayPal. It really does highlight the fact that it's entering that that growth or value phase. So based on cash flow estimates, it should be at 123, but people are pricing in that this company, they're pricing in worst case scenario at the moment the market is that there won't be a real turnaround and it will be slowly dying out from here. Let's just keep going, and then I'll look at cash on hand. Seeing if there's anything that really sticks out. Free cash flow is super, super nice. Here we go, balance sheet. And why is this one red? No, debt to ratios increased from 20 to plus 5 years. Yeah. So they got a little bit more debt now. 11 billion in debt, 10 billion in cash, with 5 billion in free cash flow. So there's definitely no solvency risk here. They have plenty of time, 1, 2, 3 years, easy to figure out their mess. Now that they have a new CEO, they could easily do that. Maybe. But but there's no solvency risk for PayPal anytime soon. So that gives me a lot of confidence, the fact that they just have so much cash on hand. More assets and liability for short and long term. So financially, it's a very strong company. It's just a company that's just not growing, and people are losing confidence in management. So this is the buyback we were talking about. That's how much yield you're getting just from the buyback program. It's basically like they have a 12% dividend. I mean, it's absolutely insane. So your share of the pie is just getting bigger and bigger and bigger. That's what we like to see. Plus, they got a dividend. I mean, now with the current valuation of this company, I mean, these combined are close to 15%. I'm not really sure why this dividend estimate here is at 0.24% when it's actually closer to 1%. I don't understand why this is off, but yeah. I don't see why their dividend payment wouldn't be stable. It's not a bad compensation for not really doing much to the company. Let's see here. Mr. Alex Chris served as president and CEO and director of PayPal Holdings since September 27, 2023. Well, that's a little disappointing for him because if we just come back up here, we're on a weekly chart right now. September 2023. I mean, yeah, 3 years and the company's lower than it was before. So not super exciting. He served as but this is where I believe that, you know, the value trap behind PayPal is a little bit no longer here, right? Everything's better than it was back here, but the price is lower. So the value trap would have been getting in on this ticker after the initial big sell-off, right? That huge crash that we had and then consolidation. But yeah, you never know. Okay, let's see here. He served as executive vice president of general manager of Intuit's small business and self-employed group at Intuit. That doesn't actually sound very good because small business and self-employed group at Intuit is absolutely horrible. So I'm really happy that there's a new CEO on the board. He's a successful entrepreneur with a proven track record. Seems more like he's a not so successful corporate board, but yeah, we'll see. Intuit since I think the capital business is all right. But compensation is definitely not bad. One thing I'm not crazy about is the just general selling insider trading volume. It looks worse than it really is, just because the amount is fairly low for such a large company. I would be worried if I saw some insider dumping, for hundreds of millions of dollars, but that's not, or even tens of millions of dollars. That's not really what we're seeing. We're seeing more consistent sell plans being executed, employee options being executed, and so on and so forth. There are no shares being bought, though, besides from the company itself. I would like to see some insider buying. That's usually what gets me excited. People sell for many reasons. It's part of your compensation plan. It's part of, I don't know, you need a house. You just wanted to sell anyway at some point this year. But people only buy for one reason. And people only buy because they think something's going to go up. Vanguard's been accumulating, BlackRock selling. Number of employees going down, I think that's great. This was a very bloated company, 2022. Let's go back to the chart on the monthly. Yeah, you can see they needed to start cutting some staff in 2022. Very, very bloated company, but in the beginning of COVID, they absolutely blew up, right? So now they're kind of getting back to those more fair prices. A lot has happened since COVID. And look at that. All the value of this whole pre-COVID run-up and then into COVID has just totally gone back down. So now you could pretty much argue it's at reasonable prices again. Still probably more employees than I would like to see. I think they can go ahead and cut probably even more. Nice. So who is Enrique Lors? Let's see what our handy AI says on the CEO. Zoom in here a little bit more. The CEO swap is a move away from product visionary towards a disciplined operator. This is what I like to hear. The board essentially signaled that Alex Chris had the right ideas, but Enrique Lors has the experience to actually make them work at scale. Here's the breakdown of their track record. Outgoing CEO Alex Chris. Chris was recruited from Intuit, where he ran QuickBooks specifically to revitalize PayPal's product lineup. The track record: he successfully launched Fastlane, one-click guest checkout, and PayPal Everywhere, offering 5% cash back on debit cards and to combat Apple Pay. That's not bad. Under his lead in 2024, PayPal saw a return to profitable growth, higher transaction margins, and better Venmo monetization. The failure: the board felt his pace of execution was too slow. The final straw was likely this quarter's 1% growth in branded checkout, which suggests his new products aren't gaining traction fast enough to stop the bleeding to competitors. Yeah, I think people are attacking Venmo and PayPal at all fronts. Not to mention, there's always the scare from crypto, even Coinbase, right? Coinbase Commerce. And just providers like Stripe, right? Stripe, if you have Stripe, you can't use PayPal. And a lot of people, Stripe is your number one option. Or if you're using Shopify, then by default, you're using Shopify's basically backend, which is like Stripe and not PayPal. So there's a lot of these larger platforms. When the internet was first booming, there wasn't all these Stripes and big platforms like Shopify. So you would need some sort of easy solution for people to pay. That's where PayPal came in. Then people didn't want to use their credit cards in the beginning of e-commerce. There's so much that's changed. And this is all putting a lot of these headwinds on PayPal. All right, let's see. Incoming CEO, Enrique Lors, effective March 1st, 2026. Lors is an HP lifer, 36 years. HP lifer, that's a good one. He rose from engineering intern to CEO. Wow, that's really great for him. He has been on PayPal's board for 5 years and was the current board chair. The track record, he is credited with a massive 2015 split of Hewlett-Packard and transforming Hewlett-Packard into a hardware seller into a subscription service business. Hewlett Instant Ink. Let's actually look at FinViz. HPE. I mean, pretty solid. Similar PE to PayPal at the moment. $30 million company. Very similar statistics to PayPal. Shares outstanding, slightly increasing at this point. They were decreasing. That was in 2017. Yeah, you can see what that does to the price, and that's right now happening in PayPal. Just saw that message, Heiko. Oh, Daddy Mug. All right, let's go back before we get too distracted. The track record, he is credited with a massive, okay, that's what we just said. The execution specialist, that's what we need. Lors is known for his extreme cost discipline and operational rigor, while Chris was a product guy. Lors is a systems guy. This is exactly what PayPal needs. Hopefully they'll get rid of some of those too many employees. This appointment suggests the board wants someone who can cut the tech debt and bureaucracy that has slowed PayPal down, focusing on a few high impact areas rather than trying to fix everything at once. Looks good. Bottom line, the board isn't necessarily saying Chris's strategy was wrong, but they are betting that Lors, who knows the company's internal pipes from his time as chair, can execute the strategy with much higher precision. This is our guy. Lors is born in Madrid. He earned a bachelor's degree in electrical engineering from Valencia. It's a really nice city. I've been there several times. And then went to Barcelona School, HP Engineering in 1989. Yeah, pretty clean cut there. So right now we're still trending in this area. I still believe we might see a move over 44 before market close today. It seems like there is somewhat of a floor coming in. We've already tried to break below it here, move here, morning momentum, probably some sell orders finally being executed, some stop losses being executed. And now there's a little bit of a base around 42.68. But if you're looking to hold for how long we are looking to hold on something like PayPal, as this is right now focused on our long-term portfolio, some things that we're looking to hold at least a year, you have to zoom out. And at this point, you know the company's generating more money than they did 10 years ago. And we're at roughly the same exact price they are now, plus with the share buyback program, plus with dividends. So that gives me a lot of confidence in our position that it's a fairly safe play. Obviously, anything could go lower, but give it a year, and I mean there could be multiple retests of this former high in the 90s. That's about 100%, 130% move. Our cost basis for this ticker is right around here. We bought in this consolidation phase, or technically in this breakdown in this buy area over several weeks. We started here and then we were accumulating all into this zone. Maybe we'll buy a little bit more, but we are already slightly overweight, so we would have to sell other positions first. That's something we'll have to value. So yeah, overall, I guess we were expecting it wasn't going to be the best earnings. It did sell off more than we expected, so that was new. But when we went through the earnings, there wasn't any major red flags. There wasn't anything new. It was all stuff that we expected to see. So I think there is a short-term overreaction from the market. I think a lot of stop orders were executed, and we'll be continuing to hold this one and go from there. I think this is probably a good time to think about the very, very simple quote from Warren Buffett. Here it is. Be fearful when others are greedy, and be greedy when others are fearful. And I think that summarizes our PayPal play at the moment. This seems like a really good buy opportunity. It looks like we started accumulating a little bit too soon with PayPal. But for now, I'm pretty happy with the position overall. And I'd feel safer in PayPal than a lot of these high flyer Mag 7s, because those you can just be down 50% on any sort of earnings that come out, or the second the credit markets, private credit markets get a little bit weaker, the second some more bad news or any sort of bad news on a macro or micro level comes out. But with PayPal, the bad news at this point seems to be extremely baked in with a overcorrection from the markets. So that is our analysis. We'll see what happens. Obviously, nothing here is financial advice. This is just opinion and entertainment and commentary. What you do with your own money is up to you. We don't know your current situation, and that is something you'll have to figure out for yourself. Thanks for tuning in, everyone. 406, I gotta run. We'll probably be coming out with another video today, so stay tuned for that. Thanks for stopping by, saying hello in the chat, and we'll see you guys tomorrow. Ciao for now.